All right, let's talk about retirement savings. You spend your whole life building this nest egg, but how do you turn that big pile of money into a predictable paycheck you can actually live on? Well, it all comes down to one crucial number. Let's dive in and demystify it.
This is the million-dollar question, isn't it? You see that big, satisfying number in your 401k statement, but what does it actually mean in terms of monthly cash flow? It's not just about what you've saved. It's about what that savings can buy you as a guaranteed income stream for the rest of your life.
So let's get right to it. We're going to look at your retirement paycheck. There is one key number that acts as the bridge between your savings and your income, and really understanding it is the absolute first step towards feeling secure in retirement.
And here it is, the annuity purchase rate. Now, the easiest way to think about this is like an exchange rate for your retirement. You're handing a lump sum of your savings over to an insurance company, and this rate is what they use to decide how much guaranteed income they're going to hand back to you. And the logic here is really simple. The higher the purchase rate, the bigger your paycheck's going to be. A lower rate, well, you get a smaller one. That's why this number is so incredibly important to pay attention to when you're looking at different annuity options.
Okay, so how do they even come up with this rate? You might be thinking it involves some kind of super complex, secret formula, but honestly, it's way more straightforward than you'd think. Let's break it down. It's really just a simple three-step process. First, you just need to know the annual income the annuity is going to pay you. Second, you know the purchase price. That's your lump sum investment. Then you just divide the income by the price. So, for example, let's say you're getting $5,000 a year from a $100,000 investment. You do the math, and boom, you get 5%. That's it. That's your annuity purchase rate. Simple, right? For every dollar you put in, you're getting 5 cents back in guaranteed income each year. It's a clear, powerful number.
Now, you might also see this presented a little differently by an insurance company. Sometimes they talk about a dollar amount per thousand. Don't let the wording confuse you. It's the exact same math. A rate of, say, $50 per thousand on a $100,000 premium, well, that gets you right back to that same $5,000 annual income. It's just another way of saying the same thing.
So is this rate the same for everybody? Nope, not even close. It's not a universal constant. It's actually highly personalized, and it's influenced by several key factors about you and what's happening in the market.
Here are the big ones. Your age and gender matter a lot because they help the insurance company predict life expectancy. That's their risk calculation. The type of annuity you choose and how long you wait to take income, what's called the deferral period, are also huge. And of course, the big one is the overall interest rate environment. That really affects what the insurance company can earn on your money and, what they can therefore offer you in return. And this chart really shows how different kinds of annuities use this rate. For a SPIA, a single premium immediate annuity, your income starts right away. It's the most straightforward. For a DA, a deferred income annuity, the purchase rate actually gets better the longer you wait. Then you've got products like fixed-indexed annuities where your income might be calculated on a totally separate income base, which can be different from what you actually invested.
So after all that, why does this one number matter so much? Well, because it's pretty much the price tag on your retirement security. It's your key to making sure you don't outlive your money. Here's the bottom line. When you're talking about annuities, the purchase rate is the whole ballgame. It is the single most important factor. It's a direct translation of your savings into your future lifestyle. It tells you exactly what your money is worth as a guaranteed income stream. So this leaves us with one final thought for you to take away. Are you asking the right questions about your retirement income? When you talk to a financial professional, don't just ask what your account is worth. Ask what purchase rate you can get, because that tells you how much guaranteed income it can actually buy you. And that's a much more powerful question. Thanks for joining us.